Happy Monday, February 15th. Welcome to the show. My name is Les Solgrove. This is Simply Des Moines 15-minute real estate market update. And boy, I tell you what, it's been a cold last week here. Valentine's Day was yesterday. Temperatures were below zero the last couple of days or last several days in a row. And I sure hope everybody's been able to stay safe out there. So, hey, let's jump into this week's show. Wanted to give you an update as far as how the market has been affected by cold weather. And we're going to see some numbers here today that are going to show you that, we are affected by this cold weather. We've had a little bit of a drop in, new listings and stuff like that this week. So let's jump right into the show. So the first thing here on the top story, we're going to talk a little bit about the return of the inverted market. So 2021 is the year where we thought we might be able to get out of that inverted market. And that's basically what I defined last year, right about here, where you can see where we have had more sale pending homes under contract than we had homes for sale. And that's when we actually inverted. And it looked like as the year was ending, we were going to come down and get out of that. But as you can see, when this chart starts back over here in January, we jumped right back in. And in fact, we are at a higher gap right now than what we were at any time last year. So it's even worse than it was last year. And we haven't even hit the point in time where COVID-19 had hit us last year. So COVID-19 still has us in its tracks. And so it's going to be hard to say what's causing that, other than just the fact we don't have enough listings and more buyers than we have sellers. So also, top story this week, and this will kind of allude to what we'll talk about a little bit later and maybe into next week. Here is the homes for sale count. And I thought it would be interesting to go back. I was talking to a client earlier yesterday, and they're getting ready to go on the market, and they asked what the market was like right now compared to last summer and last fall. And so I went back and I looked at inventory levels. And you can see that overall, all the homes for sale, we had 2,621 homes for sale on November 1st. And as of yesterday, we were at 1,929 homes for sale. And that's a 27% decrease. But boy, what's really shocking is that November 1st of last year, we had 1,234 single family resale homes. So not condos, not townhomes, not new construction, and we're down to just a mere 575 single family homes for sale right now. And boy, I tell you what, that's really what's causing us to be very, very short of our inventory, and it's going to certainly drive our pricing up as we move forward here into the year. So the week in review, as I mentioned, we did see a drop year over year. Our new listings added, we had 179 new listings added this past week, and that's about 100 less than what we do typically this time of year. A lot of that is, honestly, it just has to be because of the sub-zero temps this past week. We also saw another round of price increases here, 268, predominantly new construction, and that's a couple hundred more than we normally see again compared to last year here. The sale pendings, even though we have this low inventory and we're having high price increases, we're still we're outpacing our offers accepted. So we had 179 homes come on the market and 256 went under contract. So folks, that tells you that we're still outselling the market from our new inventory. And once spring actually arrives and we start to get more homes on the market, hopefully the buying frenzy will slow down just a little bit, but it's out there right now. Back on market numbers, we were hitting about 20% of the homes that were under contract went back on the market this past week. So 52 buyers had opportunities to rebuy a house that fell through for whatever reason, whether it was financing, inspection, or whatever. Open house counts, again, I'm just repeating myself every week. We're very, very low on our open house counts right now. 300 new construction and 53 resale homes. So if you were out shopping for open houses this week, God bless you. I can't imagine, a lot of people are out anyway just because of this weather here. But so let's jump into this week's spotlight. And last week we announced we're going to talk this week about pricing. So we're going to focus a little bit on list price, price at offer acceptance, which is pending price, and our median sale price. And this graphic is going to start to look, or this format's going to look pretty familiar to you as we move throughout the year. We're going to be looking back at 3 years, this year, last year, and the year prior. The reason why I'm not going to just do year over year is because last year was when COVID kind of hit, and I really wanted to have data in here that shows you kind of what happened in a, I'm doing air quotes, you can't see me, in a normal market. And so 2019 was our last year of a normal market. So what this graphic represents here is the median list price of all homes for sale. And you can see here in the red that we had a little bit of a spike. That's predominantly from the new construction inventory pricing that goes up. So there's our, we had a pretty good jump there in late January, and that's kind of what is causing that. But what you can really see here is that we're well above 2020's median list price. So 2020 ended over here in December and picks right back up. And, for the most of the year, we've been building our median list price up. A lot of this has to do with the new construction coming on. It's the only inventory that's really able to be added at the will of the builders and the developers, where the resale side, we are dependent on home sellers saying, hey, it's time to put our house on the market. So when we see a lot of inventory coming on the market this past year, it's predominantly been new construction. I do want to break this down this week only and just show you, well, first here, there's this little dotted line. This represents when COVID-19 hit last year. So I do want to break down this week and show you single family resale numbers and single family new construction. Only reason why is because we've got this little anomaly right here. This little spot right here where you see the inventory median list price dropped dramatically. I talked about this 2 or 3 weeks ago. There was an error in our multiple listing service data where we had many new construction homes that were listed as resale. They weren't tagged properly. There's no way for me to go back and correct the data. I mean, it would be basically me guessing, going backwards, and I don't make that a practice to make any guesses here. I'm basically reporting what I see in the multiple listing service. But you notice here from about May on, our median list price jumped up quite a bit. And I suspect this is kind of when a lot of the new construction homes came on the market. Some of these are legitimate price increases, but I think we saw a pretty good jump here, basically because we had a lot of new construction inventory coming on the marketplace, and it was miscategorized, and it would just cause this rise in our median list price. And it wasn't noticeable all along until one point where I started to go back and look and say, guys, what kind of homes are we seeing out there in resale? And that's when I noticed that we had about 140 homes that were miscategorized. Well, they made that change, and long story short, it dropped our median list price down here. If you look at the single family new construction here, so this is on the flip side, when we added that inventory back in, you can see there's a spike in median list price. And no, that's actually not due to the increase bringing that new construction inventory back in, because if you think about it, that new inventory that was in the wrong category came back in. It pretty much matched what was here already. This spike indicates where we had that rise in pricing. So again, it's about $8,000 increase here in pricing, and that's why we're seeing that spike. So that spike is not due to bringing more inventory in. It's basically because of the bump in pricing. So let's just, for the rest of this, we'll just focus on all properties. We won't break it down this week. This is indicating the pricing at sale pending. And this one is kind of impressive. The blue line again, last year, 2020, you can see that our sale of homes, the price of our homes that we're selling was on the rise throughout most of the year. And as we ended the year and it starts back over here in January, we see that red line pick right back up. and it's still on the rise. We're seeing, a good, was that 225 to 260. That's a huge jump in our pending pricing. And a lot of that, again, is just because we're selling more new homes this last year. So low mortgage rates are helping that. The availability of new construction is helping as well. The median sale price, however, this one is actually the graphic that tells you the true story of where prices are kind of going. And again, you'll see the blue in 2020 was kind of on the rise. I will tell you that the first couple of months of every year is kind of like the testing period. We see these large ups and downs in pricing. This is pretty much when we start to see homes come on the market, and usually the lower price point of homes come on the market and they sell quicker. So that's why we start to see this kind of drop, because we're seeing some of that early inventory sell and close right away. So it's not until we get into about mid-March that we really start to see that all aspects of our market kind of come into play, and then we start to even out. So, but in the meantime, we are still well above our closed median sale price from a year ago, from about 208 to 209 up to around that 230 mark here as of this past week. So huge jump there. To give you another idea of how this looks over time, this is a representation going back to 2016 of the median sale price over time. So I took the whole year of 2016, and this is the average, or the median sale price for 2016 was 177, 186 for 2017. And you can see that it incrementally increases by about 5.5% year over year through 2020. But 2020 to 21 here, where we're at right now, so far, just 45 days into the year here, we are already up a little over 7% of increase in our median sale price of homes closed. So I just think we're still going to see some rises. That doesn't mean we're going to maintain the 7% for the rest of the year, but it's certainly going to be out there. So I think, frankly, let's see, that's, I think, it for this week's show. Let's talk real briefly about what we're going to talk about next week. Going to come back and we're going to talk about the heat of the market. It's going to be a nice topic to talk about after coming off of a week at sub-zero temps here. So next week, we're going to talk about the hot housing market and how hot is our market, what aspects are really under fire, and which aspects are maybe parts of our market is maybe not quite so hot. So I hope you'll join me next Monday, the 21st. Monday's the 21st. And thanks for joining me every week. This is Simply Des Moines 15-minute market update. My name is Les Solgrove, and we'll see you again next week.